Hello and welcome to another episode of All Things Money. I'm your host Fatima Attarwala, and with me today is economist and analyst Ali Khizar, who heads BR research at Business Recorder. Hi Ali, welcome to the show.
Good. Thank you, Fatma. Good to have you. Good to talk to you.
Good to always talk to you. Ali Khizar is also my former boss, and it's a huge honor for me to be interviewing him in this capacity, to be having this conversation with him in this capacity. So, how life changes. Anywho, Ali, today I saw that your article in BR Research talked about how oil could lead to inflationary prices. Now we know when we talk about Iran, we talk about oil. And after everything that happened in the Russia-Ukraine crisis and how the commodity prices spiked and how it led to Pakistan to near default, do you think that if this war extends to weeks or months, this is something that Pakistan could be looking at again?
If this war extends to 2 weeks, okay, we can live with it. But if it war extends to 2 to 4 months, then we got a big problem. And I think it's a global problem. If oil prices to remain high, they're already above 80, and the premium on the gasoline and the high-speed diesel is very high. And if that going to cross in $100, which may happen in a few days and stay there for, let's say, couple of months, so that could have an adverse impact on Pakistan. First, it was going to hit the inflation. So you have to pass on the prices to the consumer here, and the prices would go up, and you know that how the people react and how the impact is on the inflation and all that. So that would have a direct impact on inflation first. All the supply chain, especially in the perishable food item, would have almost a direct impact. Like where the oil prices move up, the first step is that oil prices move up. In fortnightly, the petroleum prices move up here. And after petroleum prices move up, like within a week or two, your transportation prices moves up, and because of that, your goods, especially perishable goods, prices go up, and eventually everything goes up and all that. Then that brings the inflation up. When it brings the inflation up, then the other problem is that your import bill goes up. So we are managing a current account balance, as you see that almost on a balance in a current account level, because we remained in oil price around $60, and in the last year it was 70 plus. Now it's about 15% low this year so far. So that has helped to contain the current account level. And we know that there's some economic growth picking up, as State Bank has said that we are expected to grow up to 4.75%. And if you see the LSM number, there's a spike in the LSM number in the last couple of months and all that. So that's having an pressure on the import as well. And when the oil prices move up, there's another pressure going to be on that. So that's going to have an impact on your current account and the other on the import side. Then if the war continue on that, there'll be impact on on the economy of the Middle East. So you know that I've been writing about this, that we have a concentration risk on the remittances, that about 50% of our remittances, which is likely to be around $42 billion this year, is about $20 billion a year or more, is coming from Middle East, which is mainly from Saudi Arabia, UAE, and other areas. And all those areas are engulfed in this war. So if that amount that has an impact on 10%, 5%, 15%, I don't know that could have a big impact. So overall, the current account situation would go bad. Then we have a balance of payment on the financial account, where we are going through this rollover of UAE, which is not rolling over. It's just 2 months rolled over, and we are waiting what to happen after that. Remember that back in days in the COVID, when there's a liquidity problem in the Saudi Arabia, they didn't roll over us, and they gave a bus after that, and they actually fetched the deposit from everywhere in the world. So that kind of situation can become in Saudi Arabia or UAE or anywhere else because of their own liquidity crunch. They can take the money out. So I'm just exposing all the possible risks. Let's hope none of this brings the touch wood. None of these will work. But if that work, that would have an impact on balance of payment, which would have an impact on your currency, which is being stable. And once your currency moves up, when your the domestic petroleum prices move up and other prices move up, so that the inflation move up. So there's a double whammy on the inflation, so interest rate would move up as well. So the whole process of the recovery would go back, take a back seat. The fiscal deficit would move up because you would be able to collect as much taxes as from petroleum as you're today, and your expense on the interest would increase, and inflation would go up. The whole stability would go down the road. The 2 3 years hard instability could go down the road. So it's very important for Pakistan to see while sitting at the back seat, we don't have any direct involvement in the war, but we just hope that this thing do not sustain more than few weeks. If there's a few weeks, yes, there will be impact, but that can be weathered around. But if they remain for months, then we got a problem, serious problem.
So, what makes me particularly sad right now is that last a few months back, Shehbaz Sharif talked about a 1.1 trillion package for tax cuts. Recently, as well, he mentioned that in the upcoming budget, there will be tax cuts. OICCI, PPC, other bodies have been pressurizing for tax cuts. Sources say that maybe the IMF was open to it. Now, the IMF was in town. They were having the review. It's budget season. All the sectors are pushing their budget proposal. With all the hard won stability we had, we were hoping for tax cuts in the upcoming budget. Do you think that that is still on the cards? Say the war ends in 2 weeks. Do you think there will still be leniency from the IMF?
I mean, there's no leniency from the IMF as would I see that. There's already some pressure coming up. So the shortages on the FPI revenue, despite all those high taxes, what we talk about. There is significant shortage in the FPI revenue, and I have been pushing about that. Okay, how to broaden, how to increase that. And when you talk about those tax cuts, as OICCI and PBC both echoed about that, that we have a very high tax rate. It's effectively well above 50%. You got like 29% the corporate tax rate, then you got like up to 10% super tax rate. Then you got 15% intercorporate dividend tax. Then you have WBPF, WBF, and EOBI and all that. So cumulatively, when it comes to the ultimate shareholder, that in a corporate structure, tax can go up to 60%. If not, and a minimum, it's go up to 50% on all that. The capital formation is being disincentivized. No more investment is coming into the formal sector, and that's a big bone of contention for everyone. So the government has a realization, the private sector has that realization, has made the IMF and government to realize, but do they have the room? If the government going to cut tax from where they're already short on the revenues, from where they're going to meet the revenues? Are they going to cut on the government spending? There's a bloating in the federal and especially in the provincial government. Are they going to do that? Are they going to cut the SOE losses so that the gross losses is 800 billion plus and the net losses is 4 times in last year? Are they going to do the privatization of the discourse? Are they going to make provinces to be responsible for the expenses and generate revenues on the land, agriculture, and services sales tax? So these are the questions. I don't see any big development coming on that. So when you have short of revenues and you have to manage the fiscal deficit and all, and at the time when the oil prices are already up and they'll remain at a certain level up, they may not come down to $60 anytime soon. So if we not have a D-Day scenario as in an economic D-Day scenario, we'll have a tough time going on. So the possibility of fetching higher revenues from the petroleum levy may remain limited. So the options to squeeze the lower the taxation is less. Though there's a recognition and the principally the government has a mind to reduce that, we may reduce the super tax by 1 or 2%, but any significant decline without compensating for the other avenues, either to raise revenue or cut expenditure, I don't see much reduction is in taxes, which are essentially required for economy to have to churn out the investment.
In every budget and on so many speeches we hear, the government has no business in being in business and we need to expand the tech space. And I've been hearing this for years now. I'm sure you have been hearing this for years. But I see no movement on the ground despite the current IMF program that has had a lot of stabilization. So do you think that independent of the PIA privatization and the whole Pandora box that opened, do you see any other movement in the current government to change these two factors, especially going ahead? Because if oil prices go up, everybody's livelihoods and the companies' incomes, revenue streams are going to be squeezed. So if they're still missing the FDR targets, which they are, who has the money to pay the taxes? Only people if have the money, the companies are making a profit, will they be able to pay taxes? So what would be the way forward?
That's a problem. That's a problem. That's the more and more businesses are moving to the informal side. The competition between the formal and informal are reducing, and where there's the advantage of the informal business. So if you are in a business, if you can hide your sales, and then you're better off than those who are showing their sales. So the more you are in the informal business, more you're into the trading side, less into the manufacturing side. So manufacturing people have higher taxes, higher compliance costs versus the non-manufacturing businesses. So they're more inclined towards moving non-manufacturing business. As you may see that many big business groups in Pakistan, they in the last 7, 8 years, they have ventured into the real estate, the malls and coming up. They're into the retailing, whether into the Lucky Group is coming to the milk retailing, the Sapphire Group is coming into the clothing retailing, and so on and so forth. So those are moving into the business. In these businesses, there is a room to evade tax, and there is a room to generate cash income. Then which cash income which can be siphoned out from the work and then can move out of the Pakistan through crypto or other means. Hoodia and all that. While those which are into the formal business, that's a trapped liquidity. You cannot move it and you remain in there. So that is what the problem is, that because of those taxation and other problems of capital mobility, the many businesses are moving towards from the manufacturing and the expansion is not coming. So that is not going to happen, and then there's a problem when you don't really go into the manufacturing and when you don't really go into the formal side. There's a limit to the upside. You cannot move beyond a certain size, and because of you can't have access to finance, you can't. But there multiple other problems of size. So you have to limit the size. So your scalability is a challenge. When scalability is a challenge, then getting the competitive advantage through scale is a challenge. So then your imports would become cheaper, and you're not becoming export competitive vis-a-vis the other countries. So you're gonna remain stuck in this low growth equilibrium, and natural degradation will continue. So it's imperative for taxes to rationalize, where the formal business to incentivize and capital formation to expedite.
An economist like you, journalists like you have been saying it, the bodies have been saying it, everybody has been saying it, have been saying it for years, if not decades, but nothing ever seems to change on the ground. In fact, I know, like from personal experience, I know friends and family who had jobs in which they had to pay tax, and they left those jobs to go towards companies who were like, you know what, we'll pay you less, but we won't cut your tax. So they'd rather have that, taking home their salary in cash rather than have it transferred in the bank, because even banks has very high KYC and whatnot. So the entire formal sector is slowly being pushed towards the informal sector. And even if we were to fix it, even if the economy is to fix in the next 2 years, the ones who have become informalized will not become formal in the near term, even in the medium term. So I think this is something that will be stuck in a cycle for a long, long time. One of the good things about the economy recently was the Pakistan stock market. Anytime the government wanted to say, look, we are doing well, they would point at the PSX as a barometer, even though it's not a barometer of the economy. But right now, after the bull run, the PSX is crashing. What do you think? Where do you think it will be going ahead?
I mean, PSX has that was the mother of all bull run, I would say that what we had today in the past couple of years. You see that when the market was about 125 and 150 at that level, I was thinking that it's now fairly valued. That whatever the undervaluation for moon not crossing the 50,000 after 2016, so or 2017, there's a room to move up and all that, and it was moving up. But in the last 8-10 months, like especially after skirmish with India and the liquidity after the next budget, that we moved to that, and the new investor being pumped in into that, and lure into the stock market, that it is the only avenue, as real estate is not making money and others are making money. They're coming in. There's this. It's always bound to like creating a bubble. So that's overbought. A region market was there, and the bubble was created. It was bound to fall. And you saw that after reaching at 108, about close to 190,000, it slightly started moving out because of there was some domestic political issues as that there may be some kind of some space being created for the opposition later. That was there. Then the overall geopolitical tensions were building up and all that. This Iran
Mhm.
was becoming something visibly that is going to happen. So market was falling and all that. And yesterday, right after the Iran war, the market has about almost a 10% fall. That's a
Mhm.
16,000. Now it's almost like yesterday close was almost at 150,000, 151,000
Mhm.
something. So I think that market will remain range bound, and it will see those impacts, and if those risks what we talked about earlier about the oil prices and overall impact on inflation, current account, and the fiscal deficit, if those things, if those risks remain high, market may further come down a bit, or if the risk, otherwise the market will consolidate. But it will take some time to move up from there. But nonetheless, the market had a great run, and whenever you had that such a great bull run in any market, when the correction is bloody as well. So that's I think
Yes.
it's fair enough.
I think a whole new crop of influencers, young, good-looking kids have come up who have only seen the bull run. They have not seen the market be sluggish. But I think it has become a shock to the system. They keep saying the market will be fine, the market will be fine. I don't think they realize the capacities for Pakistan stock market to remain low. Like, it can go on for years, as we saw from the previous highs. And I also think that it was a bubble. The bubble is crashing, and that going forward, even if the war de-escalates the crisis that it created, the oil price crisis, I don't think it's something that our economy in particular can absorb. We just do not have the strength for it. Especially so that with the IMF, with the everything, I don't think we'll see fresh new highs of Pakistan stock market the way we had been seeing in the last 2 years.
Absolutely. I think you're right that market has touched its high, and it will remain range bound for some time. And so if that's what I'm saying, if the prices to move up and things to go bad, can come down further down as well. But in case if that's not happening, it may range around 125, 150 and all that. So it will remain range bound. It will remain like little, what would I say, that cautious, and I don't see any kind of bull run coming any soon. And maybe it takes some time. Some good news would comes tomorrow and all that, and that would happen. And it's good for the new investor that they see this kind of shock in the market, and that will make them aware that investment and make better decision going forward.
So, Ali, last question before we wrap it up. How many weeks of war do you think Pakistan can economically survive before all the hard won stabilization that Pakistan has fought so hard for the last few years, before we lose all that?
I mean, it's hard to say, put a number and all that, but I would say that 2 to 4 weeks we are comfortable. We would go through the shock and really come back in a month. But let's see if we go up over 2 months, then we may take 6 months to a year. And if things go up like 4 to 6 months, then we may be knocking a default door again. So it's depends. It depends, but I think I would say that 2 to 4 weeks is something we can come out within months into that. Anything go beyond that, it would have an impact over maybe 6 months, a year, or maybe a couple of years. So that's what the thing is.
Trump's re-election, midterm elections, the US midterm elections are happening in 2026, and higher gasoline prices will not be very popular with his voter base as well. So I think it's possible that they are hoping to wrap up this war early. But I think
I mean,
America's also started many wars thinking that it will wrap it up early before
I
getting wrapped
mean,
up.
yeah. I think the calculus of what the Trump the US administration had is very different from what's happening. They perhaps they thought about it,
Mhm.
killing the top brass of the Iranian leadership, and they'll crumble, and either the regime will change or the existing regime would become, subservient to that, and they'll achieve their goals. But that's not happening. Iran was very much prepared for that. And they're retaliating in a very different way. The hierarchy structure is very good, and they already have commands, the military command at different level, and the council command is in place, and they already have a successor, a possible successor to the supreme leader. And the other thing is this: they're not just attacking the U.S. bases; they're attacking those
Mhm.
countries, and there's some of the civilian points as well within those countries, though within the Middle East, who are supporting this Israel and American war. So that is building pressure on those countries to go to the Trump to have to reduce it, and then you see that the three aircraft fire down by either by the Kuwait or by the Iran. We don't know
Mhm.
about that, but yeah,
Okay.
and there's some casualties of the U.S. Soldiers as well. So the cost of the war, political, economic, for Trump is very high, and for the other Middle Eastern country is very high. So I think Iran is having an upper hand on that, and they don't want this to end at this point of time, because they thought that if they negotiate and end like they did last time, the US and the allies would come back with the more power into that. So they're going for the long haul. They don't have much to lose after what they've lost it. So they're going for the long haul, and it's a trouble for everyone in the world. That's
Absolutely. There's nothing left to threaten Iran with. The worst has happened. The leader has been assassinated. There's nothing left. What more can you threaten them with? So, yeah, for them, it's a do and die. For everybody else, there's a reason to de escalate, but not for Iran. For Pakistan, if I'm being selfish, I hope not only for the little girls and the schools that are being blown up, or for all the friends and families and all the innocents in all the Gulf states, but for Pakistan's economic stability as well. I really, really hope that the war de-escalates and de-escalates soon and saner white minds prevail. Thank you so much for your time, Ellie. This was a pleasure talking to you.
same here, Fatma. So, yeah, thank you.